everyone, this is Riya Singh, the currency analyst for Nirmal Bank. So on the Forex market front, we have seen dollar index rebounding from its lows. This has happened because we have seen Fed representative coming out and giving hawkish statement, as well as global risk sentiment has heightened lately on accounts of the China situation. So, of course, if you look at the statements that have been coming out, the Fed representatives have said that more rate hikes will be needed in order to tame the inflation. Bullard had said that the market is underestimating the rate hikes, and as well as he has also pitched in a 50 bips rate hike after a consecutive of four 75 bips rate hike that we have seen. Further than that, he has stated that more monetary tightening will be needed in order to get some stabilization with respect to the demand and supply. Since the labor market and the demand remains strong, there's much needed to be done, and rate hikes will continue at least on December, and the rate cuts will only be initiated in the year of 2024. So even if the rate hikes quantum does go on a softened pace, the rate hikes will remain on the higher side, because though the market is predicting or is forecasting the Fed to top up the rates at around 5%, Bullard is seeing the forecast between 5% to 7%. So, in line with that, we are not assuming the dollar index to weaken much down. 105, 104 is the base that we are looking forward with, and I think at least unless the rate cuts come into the picture, dollar index will remain strong, and you can see a rebound that can happen into the dollar index towards the level of 108, 110 levels. So in line with that, rupee might weaken a bit, though it has given a quite good appreciative leg towards 8160 and so forth. But in one or two sessions we could see some depreciation that can happen. However, it will remain capped at around 82.25. So that is the maximum depreciation that we are seeing, at least on the shorter term, because if you look at the domestic market sentiment, that is optimistic. FII inflows have been good, and of course the rate hikes will soften here as well. But apart from that, the fall into the crude oil prices is one of the very big factor that could help rupee not to depreciate beyond 82.25. So in line with that, any rebound that can happen into the dollar index or into the rupee, especially into the Indian rupee towards the level of 82.25, 82.35, should be taken an opportunity to go short into the pair towards the level of 8160. As far as other currency goes, you can see some weakness that can come into the euro and pound as well on account of a stronger dollar. Apart from that, the market sentiment, global market sentiment is on a riskier side. And if you look at the economic numbers of the Eurozone and UK, all are predicting downside into the economy, and their central bank central bank has come forward, or the finance ministry has come forward and said that the recession is still very much into the picture. Apart from that, I think some cushioning to the pound can happen, because Bank of England may go quite aggressive on the rate hikes. Even the statement from the ECB has come in that they are considering more rate hikes. But overall, if you look at the momentum into the both the pairs, into the euro USD, pound USD, euro USD is facing a resistance at around 1.04, whereas pound USD is facing a resistance at around 1.21. So unless both these resistance are broken and traded above that, you could see some pressure that will be there into the both the pairs. So that's what the lookout from our side is coming in. Thank you all for joining.